Hello, everybody, and welcome to another episode of Beyond the Hood with Tractor Zoom. This is a special episode of Trends in 10, and we're going to try to cover all the movements in the large farm equipment market in 10 minutes or less. Now, we're sitting here mid-February, and who would have thought that there's more exciting stuff to talk about in the farm equipment market than there was in the recent Super Bowl. But with AGCO, CNHI, Deere's quarterly earnings coming out just recently, there certainly is a lot to talk about. So let's jump in. We're talking small and large row crop tractors today, high horsepower tractors as well, Class 8 combines, self-propelled sprayers, and planters. So I'm going to dive in right away with these small row crop tractors. So we're talking 175 up to 300 horsepower. Now, at a high level, this category has been growing steadily in the amount of supply. And in fact, January 20 of 2025 here, this last month, was the first time in over 13 months where we saw that supply actually drop month over month. Now, the big question is that a turnaround in the market, or is that just a little hiccup and we're going to continue to grow the supply for a little bit longer? February will probably tell what's going to happen there. Tune into a webinar. We'll throw the registration link in the show notes that we're going to have in March. We'll discuss all of the February stats and what's going on in March, and there we'll probably have a pretty good idea if the supply continues to grow or if we've actually put a cap on this market. Now, why did the supply actually dip just ever so slightly December to January? It's largely due to the end of the year farm profitability that we saw in most commodities across the country. That increased farmers' buying power, increased their sentiment, and then where cash goes, equipment flows. So what has this actually done for turn rates? Turn rates, essentially how quickly inventory is moving through the market. We saw that sit at about 2.1 for January. That was down 7% from December, but not to be unexpected. You always have stronger sales in December, but it is down 10% from January of 24. That tells a big tale into why AGCO and Deere's quarterly earnings were down so much. We had such a strong commodity market then compared to right now, and the outlook was much better in the farm economy. And so that's really driving that. Now, overall supply trends, like I mentioned, January dipped slightly from December, but only about 2%. Year over year, though, January of 25 is still up over 38% of what it was that time in 24. What has this done for values for these small row crop tractors? Over on the list price, that downward pressure continues to pull down. 10% down year over year, and a lot of that came from that last quarter, from Q3 into Q4. That pushed down about another 8% on average for low-hour, later model tractors. And auction values, though, still down, depressed about 3% year over year. We did see a small uptick from Q3 to Q4, but again, a lot of that is driven off of the recency effect and the strong sentiment and the strong profit that farmers felt towards the end of the year. Let's go on to large row crop tractors. Okay, so now we're looking at about 300 to a 425 horsepower tractor market. So you see a lot of similarities between these two, except just because of the high holding cost, high interest rates, you tend to see more significant pressure for an excess supply. So unlike the smaller row crop tractor market, the large row crop tractor market, that supply did not decline in January. So ever more reasons to sign up for this webinar to figure out when this market might actually tip. That's one of the big questions out there right now. When will we actually hit bottom with these row crop tractors? But it's been growing 12 out of the last 13 months. So annually, that supply is up 40%. The sales rate also has ticked up a little bit. But again, we had good, strong end of year profitability that helped drive that quite a bit. The annualized turn rate did increase a little bit, but again, that's still having a pretty negative effect in the down farm economy, is still drawing down values. We see list price values down 6% year over year, and from Q3 into Q4, pushing those down about 4.5% for those list price of low hour late model tractors. Now, with the auction values, though, they've taken it in the shorts, about 15% down year over year on those tractors. And again, if you're trying to sell an 8R, any of the John Deere 8R series, that does not surprise you. You've seen that. Now, Again, why does this matter, and what are we looking at to try to predict into the future a little bit? I think combines can tell us quite a bit. So pay attention here in a moment when we get to combines, because they are a category that has topped out in the market in terms of their overall supply. It's plateaued. And so we can see the effect that that's had on price. Tractors aren't there yet, but that's the telltale sign that we're waiting for. Okay, but before we get to combines, let's talk high horsepower tractors. So four-wheel drives, 425 plus horsepower tractors. What are they doing in the market? That supply has grown even more so than those row crop tractors. Supply has grown 63% year over year. Again, we saw December into January start to level off. Is it a momentary pause, or is it starting to turn? We'll find out in March. Sales have increased on those, which is a positive sign. But again, is the supply going to continue to grow? And is that higher sales pace that we just saw in January, is that a tick on the market and something that's going to pass, or is it a growing trend? Auction values are down 21% on those large horsepower tractors. And that's been an even steeper decline than that 15% that we saw with large row crops. So auction value is down 21% on high horsepower tractors year over year. One of the biggest concerns that we're seeing with these high horsepower tractors, though, is the auction to list gap. So you've got list up here and how much percent below that list is auction. That's now at 60%. So auction is 60% on average of what is list. As that continues to grow, that puts a lot of pressure, obviously, on those dealers, and then farmers have a cheaper option and a comparable that makes their eventual purchase at a dealership harder to pull the trigger on. Essentially, it's a challenge, and this is probably, besides sprayers, one of the more challenging categories out in the market right now. So combines, at least Class 8 combines that I alluded to a little bit earlier, said that they might be, the positive side of the canary in the coal mine on what could happen to this equipment market. So that supply topped out about 6 months ago. And what we've seen is a lot of the values have started to plateau as well, or at least a drop. We found the valley in those values. So year over year, Class 8 combine supply has only grown about 4 to 5%. Now, it has slowed down on the sales side, but that's to be expected in a down farm economy. What is possibly the bright spot in this, that we've seen list values on those increase about 5% year over year, and just moderately about 1.8% from Q3 into Q4. So again, a moderate increase on that. We found essentially a new normal. On the auction side, the auction prices took a pretty big hit at the end of 23 going into 24. But ever since then, they've been moderate to just slightly softer. So year over year, auction prices on those Class 8 combines are down 14%. But like I said, most of that deficit happened in Q4 into Q1 of 24. So I think this is a good sign of what we might see in other markets about 6 months after that supply peaks and is under control. The sprayer market. So the self-propelled sprayer market, one of the largest concerns for equipment dealers out there. We did a survey in a closed session used equipment managers meeting that we had, and of everybody surveyed there, sprayers by far was the number one category that was considered most concerning. Now, your supply continues to look like it does for large row crop tractors. It's not in check yet. It's only up about 30% year over year, but due to the seasonal nature of sprayers and their higher value, which equates to a higher holding cost, that puts a lot of pressure on those dealerships. So a 30% year over year supply change. It did moderate a little bit into January, so we're going to watch February into March's supply numbers to, again, see if this is just a seasonal drop that's naturally selling here pre-plant season, or if this is truly a turnaround in the market and we have supply under control. Now, the sales rate did increase a little bit from December into January, but not quite enough to keep up with the increase in supply. So the annual turn rate is down about 7% for what it was this time last year. Now, what has this done to values? It's obviously put some downward pressure on values. List values on self-propelled sprayers are down about 5% year over year, and auction values are down almost 10% year over year, and those continue to get a little bit more pressure, especially in Q4, down 12% just in the last 90 days of 2024. So one of the big issues with sprayers can be the difference between list and auction. Right now, that's sitting at about 70% auction below list. And finally, let's discuss planters. So with planters, they're another good example potentially of when you get supply under control, then you've cut down the number of variables that are attacking your market, and you potentially only have to worry about the commodity market or the net farm profitability that's out there. Because with planters, the supply is only up about 2.2, essentially a nominally flat supply change year over year, and they're starting to even draw that back down. And we've had at least 2 solid years of reduced early order periods within planters, and that's helped essentially not continue to overfill this bucket and allow dealerships to wash through a lot of their used equipment. Again, hopefully that's something that we can take and learn going forward for these other pieces of equipment, categories of equipment that are getting out of supply. And the turn rate, what that's actually done, just moderately down 6% year over year, similar to what we saw with combines. But again, you're going to have a slightly lower turn rate in a slower farm economy than what we had this time last year. And January, December actually picked up on the turns just ever so slightly. And when we actually look at values, so if I sort this out to look at just 24-row planters, production year 2010 and after, actually seeing the list price year over year grow just a little bit, about 7%, although that did fall in Q4. Some of those prices were brought down. And from an auction price, seeing something similar with about a 13% drop in the overall auction price from this time last year. But again, the spring of 24 was a whole lot rosier than what we're looking at now in 25. So I believe we've covered everything in roughly about 10 minutes or slightly under. Like I mentioned earlier, though, a lot is going to be told here in the month of February, in the early part of March, is if we're able to get the supply of row crop tractors, higher horsepower tractors, and sprayers under control. It's something that we're monitoring. That's the word, here at TractorZoom. And we're going to be presenting that data in a webinar that we're going to hold on March 26th. We'll throw the registration in the show notes. It's a free webinar. Feel free to sign up. We're also going to talk about data strategies for dealerships and the benefit of building a strong data strategy, what we've learned at TractorZoom, and some actionable steps that you can take for your dealership going forward. We hope to see you there. Take care and have a good day.